So would you explain what a candlestick does?
Absolutely. So if I say to you that gold closed up $50 today, you have intrinsically inferred that I'm representing to the current price to where it closed yesterday, correct?
Yeah.
Okay. So the Western technician puts its primary focus on a close-to-close change to chart price movement over time in a stock or commodity, and I focus on commodities and hard assets. The Japanese doesn't look at it that way, and it's a very subtle difference, but it's huge. The Japanese look at each trading session as a battle, and that battle is between the bullish faction and the bearish faction. A candlestick chart uses the identical data points, but it has one key distinction. The high and the low are drawn the same way. All the Japanese do is they draw a rectangle around the open and closing price, because their belief is that that candlestick gives you a lot of information on who was victorious during the battle of the trading session that you're looking at that day.
His first generation, so his parents had to escape from a country with hyperinflation. And hyperinflation very simply means cash is trash. Nobody wants it. And that's why I wrote this book here, Fake Money, Fake Teachers, Fake Assets. And the reason you have to know cash flow from assets, passive income, is because our cash is trash and our assets are fake.
Between 61 and 81, nobody was buying stocks because of my generation, baby boom generation. Only people who invested in stocks were gamblers. Most people were in bonds. And so what happened is they had to find a way to incentivize people to get into stocks. And so what happened in 87 was that stock market crash, and it was called the Greenspan put. So it was just on time. So what happened in 74, they started putting people into 401ks because they had to find a way to force the idiots to buy stocks. So meanwhile, real estate comes along because they can't figure out how to stop us from using debt, because the dollar became debt in 71. That's macro. And the only way they could get debt to make sense was to increase taxes. So that was in 1913. The Federal Reserve Bank was created, but so was the IRS created. That's macro. So for there to be the dollar, there had to be taxes. But they never tell people that. And the reason that real estate is, in my opinion, the best investment is because if you're good at it, the banks will give you as much money as you want. And the IRS says, thank you very much, you don't have to pay taxes. So always remember this, it's literally printing money. What the Fed does, it buys US Treasury debt, so the Fed and the Treasury. But it goes back to the basics, not real estate, it's not Bitcoin, it's not stocks or bonds. Question number one is, are you going to be a sheep, just being told what to do? You know, buy Bitcoin, buy stocks, invest in the long term in the 401k, which I would never touch. Never. Not because it's bad, it's just because I can get better deals. So we're entrepreneurs.
Gary, how did you become so Japanese? Your parents are from Hungary. And what did they say about hyperinflation when they left Hungary?
They experienced hyperinflation. I was told stories about boxes of currency needed to buy a loaf of bread. They highly believed that gold and art were the only assets to own. That's how I was brought up. My father used to go to New York to buy gold when it was illegal to buy coins as scrap gold. Yes. And
why was it illegal to own gold for Americans?
It was part of Roosevelt's thing in the 1930s when they confiscated the gold. They let you buy jewelry, but you couldn't buy a gold minted coin anymore. They had confiscated them and melted them down.
Yes, but also what happens historically is that was 1933. 1936, Social Security was started.
Baby boomers, 46 to 64 age group, we're set to retire. And the boomers had it the easiest of all generations. You know, when we came out of college and high school, We put money in the stock market, everything went up. We bought houses, everything went up. And now it's about to come down. When you talk to boomers my age, most of them have never really had a hard time. I mean, they've had booms and busts and things like this, but not like we're in right now. I really don't need a financial plan. I have a financial plan, and I have multiple accountants and attorneys and all this who I ask for guidance. I don't have a 401k. I don't recommend it for the company and all this stuff, or IRAs, because I'd rather have us be entrepreneurs who create our own assets. That's a tall order, but nonetheless, that is the reason Rich Dad's around. And so years and years and years ago, and one of our illustrious partners that Kim and I had, she wanted to make sure everybody had a 401k. And I said, you obviously don't understand Rich Dad, do you? And she was an accountant, not the brightest, but she was an A student, but the A students aren't that bright when it comes to money. And she says, well, everybody has a 401k. I went, no, you don't. Kim and I don't.
People may know there's two basic types of investing. Fundamental, which is what Rich Dad does, is income statements and balance sheets. And technical, which is emotions. Markets go up and markets come down. And the great thing, and the reason I was studying technical, was fundamentals go up too slowly. But when they come down like a house. They just drop. So I was studying technicals for self-protection, and that's when I first heard of candlesticks, Japanese candlesticks. But my brain is a real estate brain, so I just couldn't catch on to it. So would you explain what a candlestick is different than American or Western technical trading?
It is a picture, and it goes one step further that those individual candlesticks are one thing, but they form in groups patterns. Okay. And so example, one's called the three-river evening star. It has a definition, and it will give you a very accurate possibility that a market that's moving up is about to pivot and sell off. It's going to hit a top, and it will provide you that information far quicker than any Western tool. The key is most Western technical indicators are lagging. A moving average by nature is a lagging indicator. There's only a few things that are not lagging indicators, but leading indicators. Candlesticks is one of them. Fibonacci, usage of Fibonacci numbers, ratios, retracements, and extension is another one. There are very few indicators that run ahead of real-time data.